Great fun. Steve Forbes, Forbes Media Chair and Editor-in-Chief, David Bahnsen, Managing Partner at the Bahnsen Group, and Jackie DeAngelis, co-host of The Big Money Show, right here on fabulous Fox Business. All right, kids, thank you very, very much. Steve Forbes, I go to you. I don't know what 9 straight days of the falling down means, and some of it was this horrible United Health Group story. Horrible story. Obviously, we know that. On the other hand, delaying the tax cuts, I think, might set up a risk. And on the other hand, the Fed pumping more money in just because they think they have to cut interest rates, even though Bidenflation is long conquered, make more risks also. And you knew Robert Mundell, as I knew Robert Mundell. I don't know if David knew. Did you know Mundell?
I just read him through you. You
read it. Yeah, no, I mean, I'm a longtime advocate. It felt like he was a brilliant man, Nobel Prize winner.
Also the inventor of the euro.
Right, the inventor of the euro. Maybe not his finest moment, but
well, he thought the competition between the euro and the dollar would bring out the best in both. He never thought there'd be a race to the bottom.
That's a different segment, but you make a good point. But basically, what I'm saying is, instead of easy money, and I'm not going to say higher taxes, but easier money and delayed tax cuts, I would like to say immediate tax cuts and tighter money. That's all, and I think that would cure the problem. What do you think?
Well, if the Federal Reserve, which they never will do with this crew, actually announced that their goal is a stable dollar, since money is supposed to measure value like a clock measures time, that in itself would get off this curve of the idea that there's a trade-off between inflation and unemployment.
Right.
And so they're still wedded to that. And so the danger is they think, oh, inflation's still high. We got to not cut rates, but hurt the economy. Mm-hmm. And so that's a danger. The other thing I think that's beginning to weigh on the markets is, what if the tariffs don't go the way they do in negotiations? So you combine uncertainty on tariffs, how that's going to work out, a delay in the tax cut, which is a totally self-inflicted wound, and the Federal Reserve still not understanding inflation, and you've got concern in the markets. Right now, everything looks good, but you can see where it can go very wrong very quickly.
We've got, by the way, going to come up with a great tariff quote from President Trump from yesterday's Mar-a-Lago. It's very important. And by the way, not at all bad. But on the other hand, what you're suggesting is, I'm just going to simplify it and say, actually, what they could be headed for is fewer goods and more money, which is exactly the opposite of what Mundell wanted. Now, David, 2 things. One is what you make of the 9-day sell-off in the Dow, because you are a big market guy here. And 2, you know, the Mundellian hypothesis, I thought, was always a very sensible thing.
Every single word of your opening speech was utterly brilliant, except for the part about passive index investing.
That's pretty good. That's pretty good.
The entirety of the issue about inflation has to be approached from a supply-side standpoint. I have been screaming this for 3 years.
Yeah.
Inflation is when there is not enough goods and services relative to money supply. You can solve that, as was done in the 80s, with more production of goods and services. You do that with better incentives. You do that with deregulation, lower marginal rates, and just stopping punishment of business and so forth. Look, I don't think the Fed's rate policy has anything to do with inflation. They know they froze housing. They froze housing by going too low for too long, then they spiked it up so high, and now no sellers want to sell. They have to lower rates to unthaw housing. That's what's really going on. I don't expect them to say it.
Deregulation would help housing, too.
It would, but that's really more on a state level. I mean, it's very hard, obviously, for a central bank, but even White House to do a lot on that deregulation. There's so many blue state problems.
But if I said buy and hold long-term dividend indexing, how would that measure?
Well, you know, the problem with indexing dividends is it's forward-looking by definition, so you need active managers like us to tell you who's about to cut their dividend. We have to avoid dividend cuts, my friend.
I got it. Jackie, there is, I don't know whether again, cause and effect, I'm not so sure. Dow falls. The other indexes have not fallen near as much as the Dow. It's just an interesting point. But as in the case of Steve Forbes, and I think, Dave, but I don't want to delay the tax cuts. I think that President Trump has the wind behind him. He's having a fabulous honeymoon transition. He's a powerful figure. I say strike while the iron is hot, go for growth right away. I'm in favor of closing the border, too, Lord knows. But I think the first thing they ought to do is at least lock in an extension of the tax cuts. Whether they want to go beyond that 2.0, they could do that later. That's up for grabs. But at least lock that in so people can be certain that everything's going to be okay in life.
I think you're right, and I think the American people will probably be looking for that because it's something that he promised that he would do. And it worries me with respect to getting things back on track. We forget that the market's gotten ahead of itself a little bit, very excited about some of the things that he might do, and so stocks have run up a lot. But ultimately, in the last 4 years, a real mess was created, and he's got to work his way out of it slowly. I think the tax cuts would help put money in people's pockets, corporations' pockets, to make things more stimulative, and that would be a good foundation, a good base for him to work off of. Why they're trying to separate it and hold it until July, they're saying they want to prioritize the border, obviously very important also, and a key economic issue, Larry, that's costing the country a lot. Ultimately, I don't really understand it. I've always been with you, try to get it all done immediately.
Yeah, get it all done, put it all in one package. We're going to have Jason Smith on. We're going to have talk about it later in the show. But I think that's an issue. I don't know whether that bears on this Dow sell-off or not. I honestly don't know. But it raises, warning signs. That's all I'm saying. Now that we've solved point number one, and Robert Mundell, by the way, people should Google up Robert Mundell. He was a very, very brilliant man and one of the fathers of supply-side economics. Let's go to Howard Lutnick and President-elect Trump on trade and tariffs yesterday at Mar-a-Lago. Now, take a listen. It's going to go on for a bit, but it's very interesting.
The president has a very clear agenda for tariffs. And I think reciprocity is something that is going to be a key topic for us. How you treat us is how you should expect to be treated.
Would you like to weigh in, sir, on that?
You said it so well, reciprocal. If they tax us, we tax them the same amount.
Are you concerned that tariffs might hurt the stock market rise that you have seen and the economy more broadly? But won't they raise prices?
Properly used. I didn't have any inflation, and I had massive tariffs on a lot of things. You go back and look at the 1890s, 1880s, McKinley, and you take a look at tariffs, that was when we were at our proportionately the richest.
Listen, I was a young researcher for McKinley back then. Knew him not as well as I hoped. Okay, so the point is, if they tax us, we'll tax them, or reciprocity. If they bring their tariffs down, we would bring their tariffs down. This is the essence of Trumpian tariff policy, reciprocity. And I'll just read very quickly. China tariffs are more than twice as high as American tariffs. Brazil's tariffs are 3.5 times as high as American tariffs. India's tariffs are 5 times as high as American tariffs. And the World Trade Organization doesn't do a darn thing about it. So I ask you, Jackie, because I think this is a sensible. There's going to be disagreement at this table, which is what makes life so wonderful among friends. But I think, reciprocity is a very sensible policy. What do you think?
I think so, and I think the numbers that you just put out show that, as President-elect Trump has said before, we've been taken advantage of to a certain degree by other countries. And so ultimately what he's trying to do is solve the border crisis in some ways, whether we're dealing with Mexico and Canada, but also with China. We've got a massive problem that he started to tackle in his first term, but he didn't quite get there yet. And I liken it to this. In the last 4 years, inflation was driven by all this reckless spending by the Democrats for their green energy policies. They believed in them. They believed in them wholeheartedly, and they drove our prices up. And many American people said, I believe in them too, and I'm willing to pay more for things as a result of that. Well, why wouldn't you believe in an America First policy to bring trade back, manufacturing back here, rather, and have more fair trading? I would actually pay more for that. Do I think we're going to get to that point? I don't think so. I do really think this is a negotiation tool, and everyone is a little panicked. I start to panic when he says, I'm going to do it. Then we can have that conversation.
With a 15% corporate tax rate for domestic production, which I really like. Now, Steve Forbes, I know you don't like this. I'm just giving equal time. Or maybe you do. I don't need to put words in your mouth. Reciprocity, that's on the table. Or what Trump said in that. I thought it was very moderate, what he said. Very moderate. He didn't, say we're going to go boom, 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 boom. We're going to go after China. There's no two ways about that. But anyway, what you think?
Well, we do have to get more reduction of trade barriers, and that does take time. And once upon a time, we did deals where you involved a lot of nations instead of trying to do it one by one. And between the end of World War II to the 1980s, it worked brilliantly. Trade boomed, and what really harmed us is the regime we've created here on regulations. Manufacturing has been killed by regulations in the 20th century. $25,000 per employee is the cost of the regulations we have now versus $5,000 in taxes. You have a $25,000 in effect regulated tax on employees in manufacturing. Guess what happens? We lose our competitive advantage. So we should clean that up here at home. And in terms of cutting the tax rates and all, we'll become a magnet for capital into this country, which you know has other consequences. But we become a magnet. And other countries, just as when Reagan's tax cuts in the early 1980s took place, 50 countries followed suit, including places like Sweden, beloved by Bernie Sanders. And so the world prospered. So we got to show the way. Stable money, make the dollar king again, good as gold.
King dollar, good as Mundell, lower tax rates.
And then lower
minimal
tax
regulations.
Rates, which include regulations. And this economy would boom, and other countries would follow because they would have to if those governments want to survive. Every one of them, 20% approval.
David Bahnsen, better to cut taxes first before tariffs?
Yes, and not only for the economics, but the political victory. He did it in 17. He got that tax bill done, and it gave him a lot more leverage into 18 when he started going into trade, immigration, other issues.
Right.
He will get victories with these other domestic policy issues. If he starts with taxes, it's lower hanging fruit. Only thing I want to say quickly on the tariff issue, reciprocity is a better message than protectionism.
Yes.
But at the end of the day, buyers and sellers can still decide if it's a bad deal. And if they think India's barriers to trade are too expensive, they don't have to trade with India. And that is the problem to me. I get it. Politically, he's tapped into something, but I still can't help myself but believing economically, I don't really want the White House deciding what's a fair trade deal either. I really want buyers and sellers doing so. But it is...
Why not level the playing? Why not... What he's saying is, and we have to go, but this is too much fun. What Mr. Trump is saying, and what Howard Lutnick is saying is, we have a very busted, unfair trading system. So we, the United States, because we have the biggest market, they all want to sell into our market, we should do something to protect ourselves, quote unquote. And reciprocity is a great way to do it. If you cut, we'll cut. Or if you don't cut, we're going to have to take some action. I mean, it is a kind of America first.
I can do it in 5 seconds, Larry. What Steve said is very important. If you really want better terms for American manufacturers, don't worry what India's charging them. Worry what you're charging them. Our tax and regulation ecosystem is too expensive, and the fact that we refuse to commit to King Dollar. So we continue to let the exchange rate be a force of manipulation in this. We don't have to worry about what they charge if we would stop over-regulating our domestic manufacturers.
Jackie,
I like that.
There's a lot of There's a lot of sensible things going on here. Yeah. It'll all play out. That's all I'll say. David Bahnsen, when does this Dow correction end?
Look, you probably don't get a 10th down day, but who knows? It's just what's interesting is 9 days in a row. It's a lot. It hasn't gone down that much. It's a couple percent. It's still way up from the
3.5%.
3.5% is child's play.
You can see why it got my attention.
It did, and the NASDAQ was at an all-time high.
1978 was never my favorite year. Anyway.
Well, there was a lot of bad things in 1978.
But they did reduce the capital gains tax.
Oh, God, that is true. He is
Kemp
right.
Roth.
You are right about that. Kemp Roth was later. Carter, yeah, you're right. It wasn't his idea. It was Bill Steiger. Thank you,
Yes,
Steve
he
Forbes.
was. Yep.
Thank you, David Bahnsen. And for Jackie DeAngelis, even greater thanks. Remember, you can catch Jackie along with her co-hosts Brian Brenberg and Taylor Riggs on The Big Money Show. Weekdays, 1 p.m. Eastern, right here on Fabulous Fox Business.